Okay, hey, Ryan here with Bond Street Mortgage with James D. Piazza, the CEO and founder of Bond Street Mortgage. Hey, James.
Hey, Ryan, how are you?
Good, good. And we were just talking about 1031 exchanges. We're getting a little exotic today. Do you want to take a minute to just explain what a 1031 exchange is?
Sure. So a 1031 exchange is if you have a property, right? The 1031 exchange rule allows you to not realize capital gains when you're selling and purchasing like properties, similar properties. Right? And so it's a great tool in the real estate world. And matter of fact, obviously with the current tax debate that's going on, 1031 exchanges for real estate are not being touched. They're going to continue to be allowed and a big part of obviously the investment community and the real estate world. I was speaking to a financial representative over the last few months and talking about alternative investments and opened my eyes. Obviously, and I think that many of people watching, I love the investment world. I love the markets, obviously our industry and what we do. But we talked about, I was actually talking to him about long-term financial planning questions. And what struck me as really a surprising thing is if I asked you, Ryan, the biggest endowments in the world, I think, are Harvard and Yale University. How much percentage of their portfolio does Harvard endowment or Yale endowment, it's one or the other, or probably both, what percentage do you think they have in equities?
I'm not sure, but I'm gonna plug the Best Ivy, University of Pennsylvania, my alma mater, and say that I know they own a crap load of real estate there in West Philly, but I really don't know.
Yeah, so those endowments, and I'm sure the university can as well, on average, they only hold about 3% in equities, in stock.
Okay.
So obviously, as the average investor, you think that you should be 65% in stock, right? That's what the financial world trains you. Oh, you're 40 years old. You should be 70% stocks. So it's a growth strategy. And yet there is a lot of these alternative investments out there. And, full disclaimer, I'm not an investment professional and I'm not giving advice here. We're talking in related to our industries and what might fit for me as a self-employed individual and the long term. And I am more geared towards the real estate world and the things that we do. And I've always felt that, yes, there is absolutely a place for stocks in a portfolio, but how come it doesn't always seem that when the market goes up, you don't quite capture all of that upside, but when the market goes down, it takes you a lot longer to recover, right? So here's alternative investments. And when you say the word alternative investments, for most people, there's a stigmatism like, oh, that's risky, that's shady. I don't know anything about it. And so we don't really pay attention to it. And actually, there's really great investments out there that are run by the biggest money managers and financial companies, the Goldman Sachs and the Cantor Fitzgeralds, and then the reputable companies out there that you can really invest in to get a high yield. Yes. You're not going to probably get 30% upside like you might in the S&P, but you're not going to have the same downside as you would in the S&P. And so they offer good investments. And so we got to talking about how we might be able to help each other in our businesses and our mortgage services and real estate, and all of our real estate friends out there. We started talking about some 1031 exchanges. They're doing a project down in Jersey City, and the conversation came up. And I said, look, I deal with a lot of realtors that I know they deal with 1031 exchanges. What do you have for them? And we even talked about doing a seminar here in New Jersey for all our business partners out there. If you're interested, let us know. We'll gladly set it up. And so the anxiety with the 1031 exchange is if you're selling a 1031 property, you believe you have to be under contract. You have 6 months to close on the new property, but I believe you have to be under contract within like 45 days from the sale, right? So a couple of things happen, and so sellers are hesitant, right? So we just kind of hit on 3 quick areas, and that was, okay, you found your client a 1031 exchange property, and the property they're selling is $1 million, but the property they're buying is only 800,000. And they say, I don't want to do it because I don't want to pay the gain on the 200. Well, there's actually funds out there that, again, are run by some of the most reputable investment firms that qualify as 1031 exchange fund. So that if you're going to buy that property for 800,000 and you have that 200,000 left over, you can actually place it into one of these funds. And the yield is very good. And the real estate, of course, based, and that's what qualifies it. And it's very, very safe investments.
So, okay, so there are funds available. I'm trying to keep up. And I want to take a step back. So you mentioned the Ivy, the schools, the endowments, what they're doing. And so surprisingly low amount in equities, 3%. And I guess what you're saying is that a lot of the other money is in real estate and alternative stuff like what you're talking about, REITs and such?
Limited partnerships and things of that nature. Absolutely. Yep. Private equity type stuff.
Right. So there are funds.
I think he said he knew some people at Facebook at $4. Put it that way.
Okay, cool. So they're doing the exotic things that don't really get talked about at the water cooler from day to day.
Right, and you know what? It doesn't require a ton of money, and obviously, you know, the longer term clients get the better private equity deals, but you can have the opportunity to get into some of these deals at the private equity level because now you're part of that pool, so they have more leverage to go and get it. And so if their firms get a piece of it, they're bringing their clients into it.
So a few things here. I want to bring this back into the mortgage world, maybe get some loans out of this too. So one, if a realtor is working with a client and maybe they're on the fence about selling a property because they don't want to pay capital gains, and a lot of people might not even know what a 1031 exchange is. This would be a good video to share, at least to bring up the subject. And then if you're an agent and you help somebody sell a property and you're helping them identify a new one, just know that you don't always have to buy one that's more expensive.
That's right.
These funds are kind of like a filler. And also, because you're under that pressure, you got 45 days to get on your contract. You might as well get the pre-approval now before you list the other property.
And you know what? The other example that you talked about is you have you know, one of your older clients that has built a great real estate portfolio, and it does qualify for 1031 exchange, and they're looking to divest. And if once they sell, they would obviously have to realize those capital gains because they don't want to go into another property and deal with property management and all the other stuff that we know that you deal with when you have a large real estate portfolio. They can actually put all those proceeds into one of these funds. So from a realtor perspective, you're giving options to people that need to sell real estate that they might not otherwise know is available.
Gotcha. Okay, so for older divesting clients, put this on their radar. They're going to think you're a hero, right? Just for bringing it up.
Absolutely, and the numbers that I saw, you know, a lot of these funds, they're returning 6-7%, you know, and that's where you're getting even that in the real estate world today when you're talking about underlying real estate that's you know, AAA, right? Cap rates are super compressed today, right? They're, you know, in the better area, so it's a win-win for everybody. So I just thought of it a great idea to share with all our friends out there that it's a great conversation to have, especially obviously coming into tax season. Not that it's, you know, necessarily relevant, but obviously people start looking at their financials and things going into the end of the year and into next year and planning long term. That, look, I've been going after this guy, trying to get him to sell this, you know, $1 million piece of commercial real estate, but he doesn't want to sell it because he doesn't have anything else to buy, and he just holds, and maybe he's tired of dealing with that piece of real estate. And like I said, it gives him a great vehicle to do so. So it's a win-win all around.
I think this could actually generate some listings. We have a lot of agents who are watching this. I think when I mail this recording out, I'm actually going to mail a script, an email script, that positions this idea that an agent can send to a higher net worth client, somebody who they know, you know, maybe some of their past clients they've sold investments to. And this could be a great way to generate some listings out of thin air. Just remind people that 1031 exchanges exist, and also introduce them to this idea that there are these alternative investment funds. This is really juicy, James.
It's very interesting stuff. It's a great conversation to have. Definitely learned something new.
Yeah.
For sure.
Cool. All right. And then let's jump right on in. I'll get the weekly update stuff, the boring, well, not the boring, but the rates and the I know it's not boring for you, but just the stuff we all need to know as professionals about what's going on with the market. What's going on?
Yeah, I mean, rates are slightly elevated. Obviously, the whole conversation of the tax bill passing the Senate seems like as of this morning, at least last I heard, they did have enough votes to try to get that passed today. So the 10-year bond is at year highs. We're around the 240 level. It dropped considerably late this midday. It was a blip, though, off of the, I guess if you haven't heard the Flynn news, and General Flynn is going to testify, basically, and they turned him, I guess, the special prosecutor I don't know what that means. It's not anything that is overly relevant unless we see, where that goes. So I'm not here to play politics, but it obviously scared the stock market. Stock market all-time highs, and rates pulled back a little bit off of that, but they quickly snapped back on the news that the Senate seemed like they were coming together to get something resolved today. So higher rates going into the end of the year, but activity is good. New home sales were higher than expected. Heard that earlier in the week, and inventory at 1991 levels. And so, we're still dealing with that dynamic of low inventories, and it's great to see. In my world, there is more and more product. I know, Brian, we talk about it all the time, that is coming to market for new construction. Had a call with a large bank earlier in the week. They're getting back into the one-time close jumbo construction, and they wanted to talk to us about our market area here in hopes that we could offer the product. And so it's great to see. I think, I've always said it, we're behind the curve on it, and it needs to catch up quickly. And so I think if we can drive more inventory, a little bit higher rates, of course we don't want to overbuild, but if you build inventory, that will also help keep home prices at reasonable levels instead of limiting inventory and then people having to, fight over the available inventory that's there. So I'm really believing that by next spring and then into 2019, especially, I think we'll see inventory levels come back up because of new builds and new construction happening. And again, I think residential real estate is back, and we have a great run in front of us.
Cool. So we're right around that 4% range, right? Still 4 point.
There, still around 4%, which is great. It means I think the Dow hit 25,000. Right. So, all-time highs in the market, and you're still talking about a 30-year thing. It's a Goldilocks scenario. You don't typically want to say that stuff out loud because then things happen.
Self-fulfilling, right? Or you mean, yeah.
Yeah, things change quickly. But if you're talking about 30-year fixed interest rate at 4%, stock market at all-time highs, banks having the most liquidity. I mean, you look at stocks like Bank of America, hit 280 in the financial crisis, $2.80. I believe it was $28 this morning. So a lot of health and in the banking world, and the balance sheets are good. So if we get that combination, which we've seen GDP be a little bit better, some tax reform, some deregulation where it's needed. Obviously, we're not going to go scale everything back, but that whole combination is that Goldilocks scenario. No inflation. It's I think we're really set up for a good run, and I'm excited about it.
Cool. So, James, the other point I want to bring up, and I just saw this. Thank you. You closed a loan for my brother yesterday. It was awesome. Anybody watching this, seriously, if you need to close, if stuff happens with a deal and you need it to happen fast, you pulled that together really well, James. So I'm going to just blatantly plug you there.
Thank you. Appreciate it.
And I want to make a point kind of related to that. We're sitting here on December 1st, and everybody's worried about the holidays. So the mass, the crowds, the herds, nobody's shopping for real estate. If you have buyers who are thinking of buying after January, this might be a good time to get them out now, right, James? Before everybody else rushes out onto the market. This is a good hook. You can call, if you're an agent, call your clients, say, hey, people you think might be ready to buy, say, hey, we're going to have less competition right now before prices go up in the spring.
Absolutely. There's no question about it. And even going into January, it is a great time to buy. And, I don't like thinking about the holidays in the sense that things should slow down. And I know a lot of the people that we mastermind with out there, right? It's every day, every month, it's, I would say the month starts January 1st and ends December 31st. So we just keep plugging away, and obviously we're working on our 18 goals and technology and other things, but you still keep doing business. And yes, there is a little bit of a break there, because if houses are in the market, people want to sell, right? Nobody wants anybody walking through their house through the Christmas tree and the presents and the gift wrapping.
Too. Yep.
So there's a reason they're on the market right now. They want to sell, and there's many people that are waiting in line to get into Walmart instead of looking at houses. So if you want to find a deal, I always say this is the best time to start, even if you lock something in now, and definitely January to February. And come March, everybody's listing in March, spring market kicks off. I say March to April, you're always looking at 2-3% appreciation just like that. So, and the flip side of that too. I mean, you look at 30-year rates, 2013, 14, rates were into the mid fours. You can get into on a refinance on a 20-year, you're still like at 3.65, 3.75 with excellent credit. APRs right around the same. But it's a great time to refi before the end of the year. You can realize that expense on your taxes next year, and it's win-win all around, and take advantage of low rates. I do feel that we are at the crossroads of interest rates going higher here. I'm not saying dramatically, but unless there's some kind of global world or social political event to drive interest rates back down into the mid threes, I don't see us really being much below 4 going forward. And I'm going to say the bias is towards 4.5. So now's a great time to refi too.
Okay, great. Thanks, James. Anybody watching this, I know it's a lot of realtors, but it's also people who are thinking about buying a home, thinking about refinancing. Really listen to what James is talking about. He knows what he's talking about. And, these are not small numbers. 2% appreciation on a $500,000 home between now and March, that's 10 grand. So
you know it. You've been there, right? You're gonna pay it. There's no question. It's gonna happen. So.
Yep, it's gonna spike a little. Okay, James. Well, we'll be back next week. Long live Eli Manning.
My buddy Eli. Yeah. We won't talk about that.
We won't. I'm about to cry.
Exactly.
All right. Thanks, James.
That's right.